All right, let's stick with the equity market here. Stocks higher with about an hour left in the last full trading day of this holiday shortened week, still on track to end November in the green. And more Wall Street strategists see the recent rally continuing with S&P 500 hitting record highs in 2024. Lori Calvasina of RBC Capital Markets sees the index rallying to 5,000 points as her median case. Her call follows Bank of America's Savita Subramanian is betting on 5,000, as well as Federate Hermes, Phil Orlando. So this is the time of year, Julie, the market strategists that come out, they tell us, okay, here's where we are and here's where we're headed in 2024. 12 months from now, this is where we think we're going to be. So the latest one here is RBC's Lori Calvasina, her year-end target for next year, 12 months from now, roughly. For the SPX, the S&P 500 is 5,000. So that would be a gain of around 10% from where we're at now. And if you're a strategist, of course, there are always the boxes that you check off, right? Mm-hmm. So valuation, for example, even after this, November rally, she says, okay, that still looks attractive. Sentiment, also positive, not flashing warning signs. She says that we're in overbought territory here. The earnings outlook, good enough, she says, to justify another year of gains. She sees 223 for this year, 232 for 2024.
Yeah, and we always talk about these outlooks. Every year we go through this exercise, and it feels less important what the exact numbers are from these various strategists than why they think stocks are going to do what they're going to do and sort of directionally where they're looking. And it does feel like, even if not everybody's at 5,000, for example, it does feel like that there is some optimism heading into 2024, and that we're going to see a different kind of balance in the markets as well. And this is something also that Calvasina points to. She looks at the fact that bonds are going to get some investors back in, right? It has been, until very recently, a down year for prices in bonds, yields going higher. But as the Fed perhaps is done raising rates, we're going to see perhaps more money come into the Treasury market. She calls this a dampener of U.S. equity returns as people look at them sort of on a relative basis, but not necessarily a derailer of those equity returns. So that's something to watch. The presidential election is something else that she flags that obviously is going to affect stocks as well. She says that's a source of uncertainty in the year ahead.
Sure, yeah.
And I think fair to say, markets are not always good at predicting either elections or what markets will do in the wake of elections.
And the elections, though, so you have uncertainty about obviously the candidates, about their policies. I thought it was interesting there. She said most of the questions she's getting on the election at this point are actually from non-U.S. investors.
Yes.
Which was interesting. She actually, one concern she kind of flagged in this note was, do global investors see all this uncertainty that election is bringing, the candidates, the policies, and it brings in a reason to kind of reduce their U.S. equity exposure?
Maybe. I mean, there have been a lot of unexpected elections. Argentina was the latest very recently.